Good afternoon. Good evening. All right. Let's try this one more time. Good afternoon, good evening, and good night, depending on where in the world you are joining me from. I am 𝐿𝐉𝐻𝐈𝐍, and this is the Crypto and Cognac podcast show. As always, coming to you live every Thursday evening, 7 p.m. sharp, live on YouTube. And yes, sometimes we do have some technical difficulties, right? Don't blame the yak. We'll blame the production team for that, right? Guys, I'm so happy to be with you guys. As always, where the traditional and the innovative collide here on the Crypto and Cognac podcast show. We have some conversation, some libation, while we discuss this hectic and often cryptic world of cryptocurrency. But before we jump into the meat of the topic, as always, we have to do some housekeeping. This is not a financial advisory show. I am not a financial advisor. As always, remember the ICE rule. It's all about information, conversation, and education, right? Please do your own research. Please go and check with your financial advisor, have your risk assessment tolerance done, your risk tolerance assessment done before you make any decisions about your financial life. Let me just touch in with whoever is in the chat. As always, Mr. Stevie Wren, what up, buddy? Guys, before we even jump into any crypto matters, last week I would have touched on a little bit about cognac. We would have talked about the difference between cognac and brandy, what makes cognac cognac. And today I want to touch on another question that I get a lot. What is the difference between a VS, VSOP, and an XO, right? And basically it comes down to the age of the cognac, right? So VS is very special, and excuse me, that is basically the youngest blend in the cognac I guess life cycle. And all of these designations are required by the law, right? The law in France makes it a requirement that these designations be held, right? So if a cognac is a VS, it means that none of the blends in the cognac are less than 2 years old. In a VSOP, which is a very superior old pale, none of the blends in that cognac would be aged less than 4 years old. And in an XO, which is the extra old, traditionally, none of the blends in an extra old should be younger than 10 years old. But recently, as recent as 2018, the law has changed around that. And now the requirement as it relates to the law, none of the blends in that XO must be less than 6 years old. But a lot of the traditional cognac houses still stick to the 10-year requirement as it relates to their XO. And usually for the various ages, you get different characteristics. So for example, like in the VS, you usually get more fruity characteristics. In the VSOP, you get more vanilla, more oak. It's a little bit smoother as well. You don't get that harsh alcohol taste and the harsh alcohol scent on your nose when you put the glass to your lips. and then the XO even smoother. And then we start getting into, you know, the very, very fancy territory where we start talking about Paradise. Well, this is as it relates to Hennessy, like Paradise, Richard, Hennessy, and all these different unique blends that sometimes have blends included in them that are as much as 100 years old. I know Hennessy had a bottle, a limited edition bottle that was put out a couple of years ago that had blends from a 300-year-old oak barrel in it. So it could get very exciting. Unfortunately, I don't have any of those in my collection just yet. I've only gone so high as the Paradise in terms of what I've been able to obtain and afford. Maybe the next bull run allows me to take it up a notch. But more importantly, let's get back to what we came here to talk about today. We are going to be talking about market corrections. We're going to be talking about support and resistance as it relates to technical analysis. So last week when we talked about the fact that the bull run is back, I did state that we are going to see some corrections happen. We went up, we went above 44,000. And this week we've seen that correction come already. The market went back down as low as 41,000 and is now recovering somewhere around 42,000, I think. I know Stephen will check the live numbers and give it to me, and I will share that with you guys in a little bit, right? So Stephen said he got liquidated on one of his trades. Stephen, he was doing good. You have to remember to take profits, buddy. Take profits, right? But maybe what we're going to be talking about today might help you a little bit, because, you know, a lot of people get very excited about the very sexy terms like the Fibonacci and all these different metrics that are used for TA. But for me, I find that in trading, not day trading, but and I'm not a professional trader by any means, but I find that just looking at support and resistance lines really do help you to get an understanding of where the psychological levels are in terms of where you can take profits, in terms of where good buying opportunities are, in terms of how the market sees it, right? So think of support and resistance. Think of the prices like a seesaw. So when lots of people want the particular token, demand is high and there isn't much of it, so supply is low, the price goes up, right? We know that. And if demand is low and supply is high, the price goes down. So all of these things are basically indicators that indicate, how would I say indicators that indicate? Indicators that show the level of demand and supply in the market. So for in terms of support basically, and I was supposed to have some visuals, but I have to apologize. But support basically is like a safety net that gives a good impression of where people see or where the market sees or feels comfortable or confident to buy a particular token, right? And usually that support line is where a lot of buying activity would have been done previously, right? And that is basically the lower band of, I thought you were saying we had 45. Sorry about that. Yeah. So the lower band of the chart, I'm going to try to find a chart here. Let me do some quick searching, because I feel like we definitely need some visuals for this. Yeah, so support is the lower end, resistance is the upper end of the chart. And basically, one indicates where there is heavy buy pressure, support basically, and one indicates where there's heavy sell pressure, right? Sorry about that. I'm trying to get a nice image here so we can walk through quickly, guys, quickly. Okay, this year will have to work. Right. So anyway, so basically support is kind of determined by two things, right? Buyer's confidence and then a memorable price point. So basically when a cryptocurrency reaches a certain price level and bounces back up from it, it can create basically a psychological impression that this is a good buying opportunity. So every time it gets back down to that point, let's say at 40,500, people felt that, you know what, once Bitcoin price retraced to 40,500, that was a good buying price based on where it was at 44,000, right? So there was a significant level of buyer's confidence around that price point, and that is why you would have seen the price bounce off of that point on the chart. Now, similarly, you would have seen that when the market was trying to break through 45,000, that was a point of resistance because psychologically, people were not confident enough that the level of demand was strong enough to break through or create demand for Bitcoin above that particular price point. I'm getting it. And you know, one of the things that we usually see is that as the market, as the charts break through a point of resistance, a point of heavy sell pressure, or right, as we break through that particular point, we often find that it creates and it becomes a new point of support as we make that breakthrough. I'm still trying to find this, get a slide for you guys. Huh? Give me a chance. Give me a chance. Shout out to everybody in the chat, in the chats. Anil, Onika, what's up? All right. We cooking with gasoline here. even more reaffirmed the narratives of a downward trend. And now that we are seeing some positive sentiments coming back to the market, we are seeing the market continue to break out over and over, pushing past previous points of resistance from 30K to 35K, breaking through 40K, reconfirming that level of support, bouncing off of the 40K line recently, as Stephen would have showed us, bouncing at 40,500. And we are seeing more and more of a bullish narrative, obviously around the Bitcoin ETF news, the halving news coming, the potential demand coming in by institutional players because of the ETF, and obviously the reduction in supply because of the halving. So we can continue to expect that we're going to see more and more positive narratives. We're going to see more and more potential breakouts. But as always, in this movement up, we will expect to see corrections. We will expect to see some breakdowns, but usually we won't see those things happening beyond the point of those support lines. But again, if we break through a support line, be very cautious, because we have to look at what the previous level of support was. So if we break through 40K, if we break down beyond 40K, we have to look at what was the previous point of support. I think that's around 38,000, and then maybe 35,000 from there. So be careful if we break down beyond the 40K mark. But if we do break out beyond the 45K mark, as always, be patient, wait for it to be confirmed. But once we confirm that breakout, we can be almost relatively certain that we are going to be continuing to have more positive momentum upwards. We can be looking at a 50K, 55K, and it can happen very fast, as we saw with this move up to 44K, right? But as always, that is all relative. That is all based on us not having any black swan events, no wars nowhere, that kind of thing. But hey, what's up, Eddie? For those who don't want to have to manage their portfolio stressing about support and resistance lines, you could just huddle, right? You could just hold on forever, right? DCA. But again, guys, this is not financial advice. This is just me spitting, sharing with my guys in the chat and you guys out there in YouTube land. So just wanted to touch on those simple things. A lot of people get very, I would say, excited about technical analysis and start drawing lines all over the place, confusing themselves. But for me, I think, just the basics of support and resistance are good indicators for those who are looking to, put in some trades, maybe take profits at times, reinvest those profits to continue to grow their portfolio instead of, trying to make a buck on a daily basis. More long, medium term traders. I would say support and resistance are very, very simple strategies that you can use to just do some basic technical analysis as you grow your portfolios in this crypto space. Now, I would say that these apply more to the bigger blue chip cryptos as it relates to altcoins, meme coins, all these different things. Anything can move that market, right? So don't be going and drawing no support lines and resistance lines for the latest meme coin that dropped, right? Because those don't operate by any real sense of strategy, TA. That's all based on how people feel, the meme narrative at the time, how many people think they could make a buck. So when you're talking about TA, when you're talking about support resistance, stick to the blue chips when you are doing these analysis, right? Not financial advice. At the end of the day, your money, your choice, right? So guys, that's pretty much it for me for this week. Let me just jump to the chat there and see if there's any comments, questions that I need to respond to. Steven saying he thinks 47 is the resistance. Well, I mean, I can't say 47 is the resistance because we haven't even broken through 45. So at this point, 45 is the resistance until we break through that. I mean, obviously, there will be significant psychological points. You know, the wrong numbers are always strong psychological points: 40, 45, 50, 55, 60, that kind of thing. 69, which was the last all-time high, will definitely be a significant point of resistance. Or we might just blow through it based on the momentum at the point in time that we approach it. So these things are always just indicators. There's no real form to the madness of the markets, right? Markets are based on human emotion, and humans can be very emotional. So you never know. But these are good indicators, and that's all we could hope for, good indicators. But like I said, guys, do your own research. As always, learn. Make sure you take your time. Make sure you understand. Not your keys, not your crypto. You know, be careful of how much funds you keep on exchanges, how much funds you keep in centralized protocols. And especially as the bull run starts heating up, we are seeing amazing amounts of scams. So be careful of the things that you click. Be careful of the pages that you follow. Be careful of who posts what to chats. Be careful of what is sent to you. Be careful of what you sign in your wallets, because as we know, there are nefarious actors out there looking to make a buck, especially in this Christmas season, right? So until next week, guys, I'm gonna see you guys before Christmas, and we have a couple more shows before the end of the year in season 4. So tell a friend to tell a friend, like, share, subscribe to the channel, and I will see you guys next week. And remember, as always, adoption is inevitable. Illuminati out. Be blessed, guys. Cheers.